Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 9th, 2018. First of all, thank you all for all your likes and all of your subscribes. So keep those coming. Hit the like button and the subscribe button. We'll kind of look at some of the details of the charts and the 4-hour charts for S&P 500 and see if the resistance has indeed been cleared. It seems that the stocks have indeed cleared resistance. We'll see if the rest of the markets around the world, which are mostly in bear markets, are going to pull out of this, or perhaps the United States will indeed roll over from here. We'll see. Some charts of interest I'll show: Biotech and Russia. Bonds really didn't do much. Dollar feels like it's breaking out to the upside. Gold is under pressure because of the dollar. Oil had a very nice drop, which we actually shorted, and natural gas breaks to new highs. And we also traded natural gas at MasterCharts Trading. And we'll finish off with cryptos, Bitcoin, etc. that could be brewing a bullish breakout. It's possible. Okay, let's continue to the actual stock market. Here's S&P 500. Here I actually went ahead on the 7th of November 2018 this year. I saw a breakout here above this blue indicator line. To find out more about them, go to MasterChartsTrading.com and you can see about the indicators, alerts and indicators, and then you can sign up for one of the list. I actually updated the website quite a bit, so now we have you can sign up for free access. Congratulations, you get trading psychology and risk controls videos and actual videos on trading as well. To go back to our actual charts, here on the 7th of November I see a breakout above this blue indicator line, which I just told you where to get. And I went ahead and I changed my exposure to stocks in my retirement accounts to this allocation. In other words, I currently have 40% stocks, 60% cash. I have no bonds. I have no foreign equities. I have no junk bonds. I have no preferred portfolio. I have no gold. I have no oil. I have no natural gas. In the retirement portfolio, you basically have a couple of choices, and that's stocks, bonds, or cash. And you can subdivide stocks further into small caps, mid caps, and all that. But for practical purposes, I should say S&P 500 is basically stocks, and the other security like AGG, overall aggregate bond portfolio, is the bonds. So here on the 7th of November, I went ahead and I increased my exposure back to my normal level of 40% stocks and 60% cash. And obviously your mileage will vary because you will have different age, different socioeconomic status, different salary levels and all that. This chart does not look too bad. I would call this a very likely breakout, and I think we could easily see new highs. So to see if that is indeed the case, let's look at S&P 500 mini futures. So symbol ES1 exclamation point here on TradingView. Same thing, we have a breakout on the 7th of November. And it looks very good. I think we are breaking out basically, and we could easily see fresh highs. So to zoom in into the 4-hour charts, if you so desire, you can see here clearly on this chart a resistance forming. So let me zoom into that area so that you know what I'm referring to. See how nicely the indicator lines actually call this resistance? You don't have to think about it. All you have to do is just plug in your indicators and then also put in your symbol, and there you are. Right there is your level 2818. So this level so far has not been penetrated. The price has not been able to close above it. And notice that on the 7th of November, the bar that formed at 2 p.m. That bar that formed at 2 p.m. The resistance was so far reaffirmed. Actually, the next bar, the one that formed at 1800, also did not close above this resistance line. So on the 4-hour chart, you can see a clear resistance. But the most important one to me is the daily chart. So I will pay more attention to the daily chart and pay less attention to the intraday charts. But we need to keep in mind that some people do trade on 4-hour charts, and you can use my indicators on the intraday charts. Like, for example, here's a minute chart. You can do that too. Here's 1 minute. If you really wanted to trade it, here's how I would trade. So, for example, here is that bar, the breakout bar. I'm hovering over it. And from here on, I would only be buying. And so I would be buying right around the blue line, basically. See? Right there. And then boom, we have a breakout, and then we wait. Here I would not be buying because we saw a breakdown below the blue line and not yet a close above it. So here I would be just waiting and doing nothing. And see, so far I would be rewarded. If I see a breakdown below this red line or a breakout above the blue, then we can act accordingly, buying or selling. So there is a little demonstration on how to use this on the intraday charts. So in general, this is not a bad looking chart, and I am sending alerts to my subscribers to be on the lookout to buy, not to sell, not to short. So I am accumulating, so to speak. I guess I'm buying this chart. All right, so this is all good, but let's look at the rest of the world and some of the United States sectors and industry groups which are in outright bear markets. All right, so let's look first at some of the sectors within the United States economy which are under pretty severe pressure and I think could be just bearish outright. One such sector is industrials, XLI. Here's that breakdown that occurred on 23rd of October 2018. Basically from this point on until we see a close above this blue line at 75.72, which is basically a resistance line. I would just do nothing with it. If you are an aggressive trader, then you could potentially try and short it here around the red line, which is where it's at right now. So industrials, I am not liking this chart at all. Financials, same thing. There's that breakdown that occurred on 11th of October this year, 2018. And again, the same thing. We're waiting for basically a breakout above the blue line at 28. But until then, I would be reluctant to do anything and potentially short it maybe. So industrial, financials, and energy, XLE, and notice how nice the price action is right around the support resistance line, around 70 bucks. You can see a very nice price action there, a bearish price action, by the way. XLB, which is a basic materials sector, collapsed even earlier in early October of this year, 2018. So we got financials, industrials, basic materials, and energy, all in, I would say, bear markets. So this is the sectors. Then we can look at some of the industry groups. Here's, for example, biotech, and the biotech action is just very interesting, I thought. So let me zoom in on this action. So first of all, I wanted to say that I sent an alert to my subscribers on 22nd of October of this year to basically avoid all biotech ETF XBI. And notice how the price action here, how nicely it works here. There is the opportunity to potentially short if you know what you're doing, right there on 8th of November of this year, just yesterday basically. And then immediately next day, boom, it went more than a target, just to the yellow line. So notice how nicely this price action is being caught by my indicators. So biotech, avoiding biotech currently, this particular ETF. XHB, the home builders, really collapsed a while back, and this is why I keep reiterating that you need to honor your stop. So if your stop was here on 13th of August, and you for some reason didn't exit, then you could have had as much as 16% loss on your hand. I mean, it might bounce, but then again, it might not. Maybe it will continue lower from here. You never know that in advance. Another one I wanted to show is Russia, RSX. So also a bearish security, and you notice there's a downward facing arrows here. One on 20th of September 2018, another one on 4th of October this year, and then finally here's one on 8th of November of this year. So if you're a kind of trader that likes to play on both sides, go long and short, then potentially this could be a play for you. I'm not a big fan of shorting equity until I'm very convinced that S&P 500 is in an actual bear market, and I cannot say that yet. But this chart is very telling, and you can see this is a bearish chart. I think we could see a continuation of this chart lower to possibly fresh lows. What's going on in the world? The world is in a bear market currently. You can see a low that was put in on 26th of October. This is a 52-week low. 52-week lows are always not good for the security. We're at aggressive short levels here, around 52 for European equities. I would not want to short up here. I would want to short at around 55 bucks if I was to even do that. Here are the emerging markets, EEM, and notice that very strong selling, very feeble bounces. The sellers came in always at the yellow line, never even got to the red line. So the red line is my conservative short levels. Yellow line is the aggressive one. So aggressive shorts came in here, in July, and then again in August, and then again in October. And I wonder now if we're seeing the same thing. We're seeing aggressive shorts come in. Again, I'm not aggressive when it comes to stocks, but I could theoretically play it on the downside if it even gets to 43. So maybe we see a bounce higher, then we can short up here. Not a big fan of shorting equity once again. So let me see what else I wanted to show. We got also Japan, EWJ, also in a bear market that started a little bit, not that far back, basically in October 10th, 2018 here. So again, we're at aggressive short levels, more conservative ones around $57. What does it all mean? We're seeing foreign equities, some important, actually very important sectors such as financials and industrials break down, and also some of the industry groups break down, such as Biotech and also XSD, which is semiconductors, also broke down. So we got semiconductors, Biotech, also we have home builders that are in a bear market. And then we can, they're all in the bear markets, and the rest of the world is basically in a bear market. So S&P 500 is basically the only one that is not yet in a bear market. And it's possible that S&P 500 would turn out to be correct, and indeed the world stocks will turn around and continue higher from here. Okay, let's briefly look at bonds. Here are the treasuries, TLT. Not really doing anything. Bear market. So lows were set 2nd of November last week. Probably new lows could be set again. I wouldn't short it right this instant at all. I wouldn't touch. I mean, if I had a position, I would keep it open. Short position, I would keep it open, and with a hope of it continuing lower. But if I didn't, then theoretically, if we see a bounce to 118.16, then we could potentially open a short position there or buy puts. But overall, bonds are in a bear market, so definitely avoid them. Here's AGG, same thing, IEF. AGG is a total bond market, and many of the retirement portfolios would have like sort of a total bond market super duper fund, and this is basically it. And yes, they are in the bear markets right now, so I would not be buying any bonds anytime soon. Here are the intermediate treasuries, IEF, bear market, same thing. I don't see any evidence of a bottom. Junk bonds, 52-week lows set recently, approaching those fresh lows again. I think the short sellers here are possibly succeeding already at the 35 levels right now. I mean, this would have been already a decent trade if you were doing options. So overall, bonds are not to be in right now. Myself, I'm definitely avoiding them. Okay, so let's continue to dollar. All right, so let's continue to euro versus US dollar. I'll show you this recent trade that we did. So I may have been slightly late with sending the alert, but again, if you had my indicators, I'm talking about this 4 lines on the chart, you can find out more about them at MasterChartsTrading.com. You can buy the indicators to be displayed on your TradingView chart. So here on this chart, you can see if you shorted euro here sometime around late September, then you would have had by now, if you held the position open, around 430 pips gain. So if you trade Forex, you know it's a very big gain, and this is the kind of gain that you want to have as much as possible of. Overall, the dollar index, here's DXY, you can see a pretty nice touch of the indicator lines right there on the 7th of November, and then it went higher from here. So overall, again, clearly bullish chart. I don't see any big issues with this chart yet. Here's the original breakout on the 25th of May 2018 this year. From then on, we're basically looking for buying opportunities. Now, in the United States, I don't think you can trade this particular security, DXY, which is a contract for difference, or also known as CFD. The rest of the world is able to trade, but the United States is not, which is unfortunate, but at least we have Forex. So for Forex, we can do euro versus US dollar. Here's British pound, and I can show it because the trade is really basically went in our favor really well. So I sent it as a limit, and the limit would have been triggered on this September 27th, about right there. So theoretically, you could have as little as 280 and as much as around 520 pips gain. So again, overall, dollar in a in a bull market rather, and we should be acting accordingly with respect to other currencies. Moving on to gold, since this is the thing that bothers many people. Gold is a touchy subject. I think it's in a bear market because dollar is in a bull market. Because notice here in the upper left hand corner you can see gold divided by US dollar. So they take a price of gold and divide by US dollar. And if US dollar is getting stronger, like I just showed, DXY, so DXY is going higher than XAU USD, excuse me, XAU USD, so gold over US dollar is going lower. It makes perfect sense. I think gold is in a bear market, and we actually shorted it here via gold futures and also via inverse ETFs if you're if you trade gold miners, GDX. So gold in a bear market, I think we could easily see another 4% drop to probably take out the lows from late August of 2018. Unless for some reason dollar decides to turn around and go lower from here. But I just don't see the evidence of that just yet. So let's continue to United States oil, US oil. This is a CFD, but we can look at CL1 exclamation point. This alert was sent. There's a real alert, a live alert with a 5.4% gain on oil as an inverse, so it's a short trade, and there it was sent on 5th of November at 62.76 or so, and now the price of oil is below 60. So I think we have turned around and most likely will continue lower from here for oil. But by far the best trade we had here at MasterCharts, and hopefully some of you have taken it, and this is of course natural gas or natural gas futures. So on 8th of October and then another one on 16th of October, I sent 2 alerts to my subscribers. And if you trade natural gas, and especially natural gas futures, you know this is a big gain. It's over almost 18% gain in just a few weeks, really. So this is a volatile security. Natural gas is really volatile, so be super careful with it. But on occasion, it can deliver such an incredible run. And I annotated several charts. If you have no access to futures account, then you can trade it on a retail level. So here's UNG, and the same dates on 8th of October. Actually, here it makes no sense to even look at the indicators because my indicators for such securities as UNG or USO where there is slippage, I don't even bother with my indicators because they will probably give you some false results. So to determine the direction of a trade for example, natural gas, we need to look at the futures. But for just, let's say you were only able to trade at retail level and I send an alert as a futures alert, so here's natural gas futures, the alert was sent here on 8th of October. The reason? Because we saw a breakout right there, and again we saw a breakout about the indicator lines, which you can find out more at MasterCharts Trading. So here's UNG, and on UNG the gain is around 15.9%, and this is exactly the reason why I don't like to trade it. Notice that on natural gas futures the gain from the same exact trade on same exact date would have been over almost 18%, and this is called slippage. UNG does not, it continuously loses value basically. But if you know what you're doing and you are able to smartly use leverage, so here is the same trade on UGAZ, UGAZ, and this is a triple leveraged ETF that is pegged to the price of natural gas futures. So the same thing here, there are the alerts on 8th of October, and here there are alerts on the 18th of October. Same thing, you can see a breakout and a 36% gain, because this is a triple leveraged fund. So overall, just a beautiful trade, a beautiful breakout. Congratulations if you opened it, and if you haven't, then sign up at MasterCharts Trading. Let's finish off with Bitcoin and other derivatives or other cryptos. So Bitcoin, I think, is still in a bear market, but it's possible that we're getting somewhere. So, for example, trading range here on the 7th of October was around 40%. I mean, before that, the trading range was enormous. You can see the distance between the yellow and the green lines. Let me just show you what I mean. So between the yellow and green line here, the difference was $7,600, so 100% move basically. Here, the difference between the yellow and the green line is, 59% move, $4,000 rather. And here the difference is getting smaller and smaller, and so we're now down to around 51%. So this is what I call a narrowing trading range. But the more important thing is that the bullish levels have come down, and the bullish levels here are the blue indicator line. So currently the blue indicator line is at 89.70, and the price is currently at 6,400. So this is how much price needs to travel in order for me to start believing that Bitcoin is no longer in a bear market. Litecoin LTC USD, again, notice the narrowing of the trading range. You can see that the indicator lines are coming closer together. You can find out more about them at MasterChartsTrading.com. XRP USD, also known as Ripple, and the distance here is like ridiculously low. You can see that before, the distance between yellow and, I'm just going to go to blue, was 137%. Just in September of this year, and now the distance between yellow and blue is, only 90%. So the distance has indeed narrowed. So, nothing is impossible in the markets. So we need to watch for a possible bullish breakout, and if that occurs on Ripple, that would be at 0.69659. Okay, so we got Ripple, Litecoin, Bitcoin, Ethereum. Same thing, but not as pronounced. This is a much weaker currency than the rest of them. XRP USD is probably the strongest currently. EOS USD, and there's so many currencies, but like there's one here, EOS, for example, and before there was big drops here. For example, you can see breakdowns below this red indicator line with a 50% drop afterwards. All right, so again, that's it for this week's recap. Please hit the like button, please subscribe to this channel, then head over to MasterChartsTrading.com. Click on alerts and indicators, and here I want to kind of show you the improvements I'm making to the website. Still work in progress, but number one, the improvement is you get now free access to the trading videos, and there's about 30 or more trading videos specifically on training, on how to use the indicators and how to just approach the generally approach the stock markets. So just click there, and you will be taken to click click to register, and you'll get access to my password protected areas that have only the training videos. If you want to sign up and get the indicators, and again, the indicators I'm referring to are these 4 lines on the chart. So this yellow, red, blue, and green line. And as I keep pointing out, this can be used to trade pretty much anything you like on pretty much any time frame. But once again, I prefer daily time frame for myself. And obviously get risk-free trial. So, and then we have the alerts and newsletter. So alerts and newsletter get all of the alerts about the stocks that I was just mentioning, the ETFs, the gold, Forex, etc. You get all of the stuff with also weekly videos and members-only blog. They're about the same price, $24.95, but I think yearly deal is much better. So again, finally, here we have a final deal is that alerts and indicators. You get both the alerts and the indicators, and the price is much better than if you were to buy them separately, especially if you buy them for a yearly price. So also I updated the website, and now you're actually able to check out right on the site, and you don't have to go to any PayPals or anything of that nature. But we do still have an option of paying by PayPal. It's down below here. Okay, again, thanks for watching, and have another great trading week. Bye-bye.